We're now going to look at the sole trader for 2014. Now, we're going to look at all of these adjustments and put them into a second trial balance. We will do this and then we will be able to attempt the question. The first adjustment now is on the 31st of the 12th, 2013, the stock was 80,000. No record had been made for goods in transit on the 31st of the 12th, 2013. The invoice for these goods had been received showing a recommended retail selling price of 4,800, which is cost plus 20%. Let's just deal with this issue first of all. The first thing we have to do is record the 80,000 that we counted in our warehouse. So we went debit closing stock 80,000 in the balance sheet because we're increasing an asset. Credit closing stock in the trading account 80,000 because we're reducing a cost. Remember now, when we're doing the trading account, it'll be opening stock, which is on the debit side, plus purchases, which is on the debit side, minus the closing stock, which is on the credit side, and that's the 80,000 there. Now, we've been told that we have bought purchases, which has a retail price of 4,800. But we didn't buy it for 4,800. We bought it for 4,800 divided by 1.2. So the purchase price was 4,000. It cost us 4,000, but we will sell it on for 4,800. So the entry there then is debit purchases in the trading account 4,000 because it's a cost. Creditors in the balance sheet 4,000 because it's a liability. We then have to take it into stock. Debit closing stock in the balance sheet 4,000, credit closing stock in the trading account 4,000. That's the first adjustment. Now the next one then is we're going to deal with the disposal and purchase of a new delivery van. So have a look now and let's have a look at the adjustment. Provide for depreciation on vans at an annual rate of 10%. From date of purchase to date of sale. That's the important thing there. On the 31st of the 3rd, a delivery van which cost 40,000 on the 30th of the 9th, 2010 was traded in against a new van which cost 46,000. An allowance of 16,000 was given on the old van. The cheque for the net amount of this transaction was entered in the bank account but was treated as a purchase of trading stock. That's a mistake. These were the only entries made in the books in respect of this transaction. So let's have a look first of all. The asset that we disposed of was 40,000 and the annual depreciation is 10% per annum or 4,000 euro. We bought it on the 30th of the 9th and we got rid of it on the 31st of the 3rd, 13. So in the first year we had it for 3 months. In the second year, 2011, we had it for 12 months, 2012 for 12 months and 2013 for 3 months. Hence the 3 over 12. And the accumulated depreciation was 10,000. So we bought it for 40,000 and we had depreciated it while from the date of purchase to date of sale by 10,000. Let's have a look at the adjustments. So we go credit delivery vans in the balance sheet 40,000 because we're reducing an asset. Debit accumulated depreciation delivery van in the balance sheet 10,000. This is reducing a reduction in the value of an asset. And then we bought a new asset for 46,000. Debit delivery vans increasing an asset 46,000. The next step then was, did we make a profit or loss on disposal? So the delivery van that we sold was it cost us 40,000. We'd accumulated depreciation of 10,000 and the net book value therefore was 30,000. The garage gave us an allowance of 16,000, so we actually made a loss on the disposal of 14,000. So we go back into the adjustments and we go debit loss on disposal 14,000 into the profit and loss account. Step 3. Now these steps are the same steps every single time. How much do we pay for the new van? Well, it cost us 46,000 and we got an allowance of 16,000, so therefore we paid 30,000. And this 30,000 was treated as purchases of trading stock, which of course is a mistake. So we go back into our adjustments and we go credit purchases 30,000 in the trading account. There's the correction of the mistake. And step 4 then at this, now this is quite a long adjustment overall, so you have to be very careful. We're going to do depreciation for the year. And depreciation for the year. So we had 90,000, which you'll see on the top left-hand side under delivery vans, minus the 40,000 that we disposed of. So we had, in other words, we had 50,000 worth of delivery vans for the whole year at 10%, which is 5,000. Plus depreciation on the disposed van of 1,000. And plus depreciation on the new delivery van of 46,000 at 10%, and we had it for 9 months. And that gave us 3,450. So the depreciation charge for the year on the delivery vans was 9,450. And here's the adjustment. Debit delivery vans, which is an increase of cost in the P&L, 9,450. Credit accumulated depreciation in the balance sheet, 9,450. We'll stop there and go back over it and make sure you know it.